Good evening, ladies and gentlemen, and welcome from Berkeley, Middle East. And my name is Musa Sheikh, and I will be presenting you today the difference between or a comparative view overview for CFA and CAIA. CFA, as we know, is becoming a gold signatures, a standard qualification in investment industry, while a chartered alternative investment also has earned a great reputation, and a lot of members are increasing over the year. A lot of students ask, and I face these questions quite often, that how you see what we should do. Should we do CFA or should we do CAIA? They want to be financial and investment industry experts. So always we think about um, discuss different backgrounds. Everyone has a different background. They work different way. Sometimes you're working in treasury. Sometimes you're working in corporate. Sometimes you're working in retail, and some are working in alternative investment directly. So all these backgrounds, if they are listening to me, I'm gonna analyze the course for them, and I'm hopeful that this exercise is going to be very useful for everyone listening to me in order to decide their future path for their careers. So let's start our presentation and see how it looks. Okay, so now on the screen you can see that we have an overview of comparative overview of chartered alternative investment analyst, and on the other side we have kept chartered financial analyst. Now, apparently, before I go to the content, you should know that so we are talking about a comparatively shorter course with a longer course. So CFA has 3 levels, and the density of the course is huge. And you might remember, like 20, 30 years before, it was actually started as a mini MBA in America. So it was getting popular, and then they rename, rebrand, reshape it as a financial analyst qualification. Then from then it becomes really a good qualification. It has a lot of flavors and different subjects, insight, and then suddenly we saw a qualification which is, for me, it's like a condensed financial investment qualification, which is CAIA. So let's see what is the structure of each qualification and how they are matching, how much they match each other, and what is different and unique about each other. Now, CFA level 1 is a composition of different subjects. So we start the course with financial ethics. So as a CFA, as an institute, every institute should have some professional ethics for their professions, that they should be honest, they should be fair, they should be maintain the confidentiality of the client. What are their roles and obligations, how they need to behave uh, when it comes to the client care, and the interest of the employer, how to protect the interest of the client, and where to keep the interest for themselves. So these all are we study in ethical and professional standards. Now, very interesting is every financial qualification is incomplete without using a financial calculator. So we use financial calculator. It makes life more easier. We can calculate net present value, IRR, internal rate of return, your present values, your future values, your annuities, your perpetuities. We can calculate a lot of statistics. We can calculate mean, median, mode, and we can also look into some hypothetical null hypothesis. So quantitative method is a very important integral, and it's quite deep and intense, and a lot of students always need some kind of help in solving the questions because sometimes it can be some way tricky. uh, then we move forward. All financial experts should have knowledge of economy, so we should know what is economics, what is demand, what is supply, and what is equilibrium. Are we in recession or are we in boom? How the economy is moving around, what's going on, which country is expecting a looming recession, what is a GDP, what is economy, what's going to happen to the monetary policy, interest rates, currency exchange rates, and inflation, deflation, unemployment, stagflation, and similar kind of topics. For me, it's a lovely area of interest because I feel that economy is the one that we always suffer from. For example, in UK, now we have a cost of living crisis. You can say because of the energy prices, the cost of living is getting high, and when it gets higher, you're talking about less spending, and so the economy is going to shrink because of inflationary facts. So understanding all this economics for a normal person, it's not for a CFA only, for a normal person is very, very important because a aware citizen obviously can contribute to the healthy discussion and make a difference in the life, in the economic life of them and their surroundings. So typically we have financial reporting and accounting, and this is the time where you need to expose yourself to balance sheet, statement of financial position, statement of cash flows. You have to see income statement, you have to see the notes of accounts. You should have good concepts of ratio analysis, liquidity, operating cycles, impairments, some of important dimensions in terms of the depreciation, investments, intangible assets, amortization, and of course, as investment advisors or financial or professionals, we should know about the tax implications because America, Europe, UK, these are tax-based countries. So if may you earn like $1 million, so maybe government is going to put 55% tax on you, so you are left with only $450,000. So you might be looking for some kind of tax knowledge, some benefits, some reliefs that you can achieve. And you can analyze a balance sheet, the health of the company, financial performance. That is also a very deep area. Mostly these are the largest area in terms of your examinations. And of course, we move toward the corporate issuers. We see bonds, we see the equities, we make a portfolio, how to invest, where to invest. Suppose you have $1 million. Let's give a handy example. So previously, some people wants to buy apartment. They go and buy apartment without understanding that there will be an operating cost. Property need to be maintained, and there will be so if they say 100,000, so maybe there is some cost involved, some taxes involved, and then there are chiller fees, there are cleaning, so how much they are going to take, maybe 5%, 6%, 7%. So after such an asset, maybe you can buy a share who can give you like 12%. You can invest in some blue chips, bonds, some high risk instruments, or you can see some new real businesses. You can open a restaurant, you can open a saloon, you can make an app, mobile app, you can start a new revolutionary idea. So this is all depends on how much knowledge you have for investments. Traditional investments like buying the land and home, they are always there since years. People prefer to do that because it's the way we are groomed. Our father, grandfathers, they used to do that. But we should not forget that the world is changing. If you name top 5 companies of the world, so you find Microsoft, you find Tesla, you find Google, you find Apple. So these are so huge and liquid companies with a lot of regular income. This is based on technology. So the investment trends are changing, and of course, this knowledge that we take in CFA is really going to help you. Equity investments are when you sell your stocks in the stock exchange, and so you have a floating cost, you have cost of capital, weighted average cost of capital concepts we are obviously discussing. Fixed income, when you go for the interest-based derivatives or your bonds. Bond markets are huge in America and rest of the world, so we have to understand how they operate, what are their models, what are the alternative investments. We do discuss the future trade, that is derivatives. Today I can buy a rate of dollar for 6 months. I can pay $1 and I can trade up to $100, for example. So this will be a high risk instrument, but if it clicks, I will be a billionaire, or otherwise I will be in jail. Like, it depends how your investment plans are. If you are better in prediction, you can do a better job. And of course, when we compare the CAIA, so you can see, like in CFA, there are so many topics. Sometimes I sit with the friends, fellows who are heading organizations, head of investments. They say, "Look, you Musa, what you're talking, why I should study economics? Why should I study accounting? This is the job of an accountant." So I just need to understand the investment related topics. So if you are one of them, then CFA is not a right choice for you. The right choice for you will be CAIA, Chartered Alternative Investment Analyst. So, like CFA, we will start the topics with professional ethics. These are very important because we need fair, nice, honest people in our profession who will become a good name for us. So the interesting thing is that CAIA follows the CFA Institute standard. So here it is 100% common. Then, of course, the right on target, you will start what is alternative investments. So just for your knowledge, we can talk here a little bit about traditional investments and alternative investments. When we talk about traditional investments, obviously we're talking about I'll go to the bank, I'll put my money in the bank. That is more easy, more handy, more secure. Every bank is controlled by central banks, so they are more organized, more regulated. So we feel that if we are giving money bank to the bank, it's less risky. But these are traditional investments. But we have some our human mind always thinks that if a bank is giving me 1%, 2% of a year, which is very less, but they are making like 15, 16% minimum, and high risk, they go for 30, 40% as well. In some trade, they add 100% margins. So depending on how aware and how smart their team is. So it comes to the products that are new, innovative. So we call them alternative investments. Now, for example, you invest in a mutual fund, you invest in a hedge fund, you invest in fund of fund, you invest in real assets, you buy some timberland, you invest in agriculture land, you buy the forest, you do a lot of things which are considered as out of box. And obviously now mobile apps, investing in apps, delivery app, like Talabat or Zomato or Deliveroo. Huge companies now, they have a lot of staffs and daily turnover, because they are not only charging but they are making money out of every transaction. So, and similar kind of apps, you all know, these are alternative investments. So we jump on real alternative investment. Here we get a bit of idea about quantitative methods, because quantitative methods are the one who actually give you a quantification. If you say everything will be fine, so you will be satisfied. But if I say that the things will be much better, 50% much better than the one that we had last year, so it makes more sense to you. And that's what we actually want to hear, that how much we improve, 20%, 30%. So these are all quantitative method. But here, a quantitative method is not that deep, it's more surface level. In one chapter, we have to overview and skim a couple of important terms that is going to make our life more easy. Private security. So sometimes you saw that someone has down the street, there's a restaurant, you like it, you go to the owner, you tell him, look, you want to sell it. He says he is getting old, he want to leave the country, going to back to his kids. He said, yes, I'm interested. So this is how you are going to buy his company or her company, and this is your private equity. It means private business owning. This is also a good business. Some people really hunt for private companies who are doing a medium level business. And with your money, your expertise, your knowledge, you enhance the capability of the company, you make it grow. And after a couple of years, 3 years, 5 years down the road, when the company is really big, financially healthy, then you auction in the market. So with 2 or 3 or 4 years effort, you make a small company a big company, and then you exit from the market, because day one you were planning to make money. You don't want to hold an asset. You can see there are some huge companies like Nokia. Nokia was our first mobile, was Nokia. Nokia was a love, it was a need, it was everyone has, but Nokia now is no more in the market. So you can see nothing lasts forever. So there are some smart business people who comes into business, make it faster, right approach, good financial health, and then they start exiting from it and sell it on a good price. Like you can see, Twitter now is bought by Elon Musk. So the one who sold, he took a big money and quit. Now this money he or she will invest somewhere else. Elon Musk is also going to do the same. He will redecorate Twitter, will introduce some new innovative ideas, and maybe after 3 years it is ready for a exit. So that's how the investment industry work, and you have to think like that. Now, funds is a very traditional concept. If generally I saw in women, if you are like 20 women, you sit together, you say, look, let's take $1,000 each, pull up, and every month someone will take the full amount. So this is called fund. You make a personal fund. Same concept came. Like I said, I want to make Palm Jumeirah, for example. So I call Standard Chartered, HSBC, Emirates, NBD, and BAT, all. I said, look, this is my idea. I need this much of billion of dollars. So let's make a consortium, and it will be a fund who is going to build a island. So that's a big example. Of course, we can have a smaller example. We are 5 friends, and we are very attractive to make a restaurant. So we said, okay, let's put 1 million each. 5 million is a good amount to start a small size restaurant, and let's start it. So in this way, this is the concept of the fund. Fund has different types. Just remember that fund is having a fund manager, and there are fund owners, and fund manager jobs is really important. So there are very high end fund managers in the world, which people knows them all the way. Warren Buffett was also a fund manager one time. Now he's obviously a tycoon. So everyone started from somewhere, and a small fund, medium-sized fund, or a big fund. But the mechanism of the fund is the same. So we study in CAIA what is the fund. And of course, in industry, like when we sit with the investors, investor has different preferences. So we structure them. Someone wants to take risk, some don't want to take risk. So we need to analyze, understand their personality, their risk appetite, their ability to invest, their capability to understand the risk and the returns. Based on that, we say cook. Cook is a nice domestic word for structuring. Structuring means giving a shape, and cooking means making something in a new shape. So we do the structuring for them. Structuring is really good. Some we put more debts, less equity. Somewhere we put equity versus debts. Ratio. We play around different things. It becomes your structure. So now you can easily see that if you are confused about CFA and CAIA, CAIA is right a financial investment qualification. It has no irrelevant like a MBA student, a kid, young kid, who want to study economics or accounting or this and that. It is right on target. That's why even if you want to do CFA, I suggest start with CAIA. This is your first step. This is fast, quicker, and it will build up your good base for lengthy courses like CFA. We can do the level two. Level two topics for CAIA is generally we start with what's going in the industry as emerging. We see that sustainability, environment, governance, this all is now the burning issues for the world. We see different investment model, investment policies, how the institutions like financial institution or large corporates are making their investment policies, risk and returns, how much higher risk, less risk, how to manage risk, what is capital, what is other risk that we need to look around. We assess the alternative investments. We do the due diligence, very important, how to see the investment is right, wrong. There are financial calculations that we learn in this, right on target. After CAIA, you can straight away go to an investment company. You can ask them, you can tell them, you know everything in terms of due diligence, investment, merger and acquisition, venture capital, and any kind of investment is really, really handy for you to understand. And obviously, you understand the volatility of the markets, and you can develop some complex strategies as well. That is good news for you as a CAIA students. You can really understand the complex structuring and see what's going on. There's a SPAC, special purpose acquisition. Anything like this is amazingly you can do. While CFA level 2 will be the same curriculum, and it's going to focus on the more topics, but in level 2 we have a large portion of financial statement analysis where you have to read a lot of accounting, fund accounting, IFRS 9, 7, and IAS 32, 38. Like these are all investment related standards. You need to know about inventory valuation, like first in, first out, last in, last out. A huge amount of topics are there. Maybe you use them in your practical life as an investment analyst. I doubt. But still, like they are part of the curriculum, we have to respect that. And level 3 is the same almost, but just only the exam patterns will change, and everything will topic advancements and everything will be the same. So with this, we will conclude our session. I just want to Summarize that what we discuss is CAIA is faster. You can finish one level in 3 months, and another 3 months you can finish, or maybe 6 to 9 months. Or if you are a very busy professional, you have only weekends to study, you can finish it off. Otherwise, if you take an off for, let's say, 1 month, every day you study 4 hours, 5 hours, more than enough for one level. So this way you can also manage. CFA, of course, is the exercise. It takes more time, more energy, more commitment. And even after CFA, what like? If you are not specialized, you have to see your background. So you are from which background? What you do? What is your plan? I know so many CFA students qualified. They are not doing a relevant job. The reason is that they pick it very late, and they couldn't enter in investment industry. They were doing whatever they were. So always there's a right time, right age, right situation, right circumstances. So if you feel that there is worth of it, you should invest your time, energy, and money and resources in a right qualification that suits you. Never go get overexcited that oh, CFA is a big qualification or CAIA is a big qualification. I need to have it. There are a lot of qualifications which are really huge. We can go to Harvard to study. That's, it's all up to us, like our resources. But we need to know what we want to get out of all this exercise. So with this advice, I want to wish you a good luck. And if you have any questions, you can approach Berkeley, or you can write on the comment box. If you like our channel, you should subscribe it and give a thumbs up that it was helpful. I wish you good luck, and wherever you are and whatever you do, take care of yourself and take care of people around you. Have a lovely night. Bye bye.